There are so many strategies, and I will draw this out for you. You might be starting at point A and you want to go to point B. Now, if we are going to take a look at what is point A is where we all have been starting. So we watched the videos, we've seen other people having success with models, we see the results of other people, and we're thinking by ourselves, how can we achieve the same results? So you finally end up with trading a model, and that can be IFVG models, PO3, maybe Goldbach, maybe supply and demand. I don't know if you prefer that to trade, but it also can be IFVG, let's say all the ICT models, right? So what you are going to do, you are going to find a model, you're going to trade it, you get the results, and at a certain point in time, what happens? You might get a few losses. So you end up losing. And what happens there? Let's say you have been trading IFVG models. So you've started trading IFVG models and you have a few losses. So what are you thinking by yourself? You're thinking, oh, this might be not working. I might need to switch to another strategy. So from there, you are going to find a new strategy. You're going to might trade Goldbach and you continue with the loop. You have some results, but after a while, you get losses again. And you're thinking by yourself, how can this happen? I have all the knowledge of the IFVG models, of the Goldbach. I might need to try another strategy. So from there, you might be going to PO3 or market maker models, whatever you can think about, and you start again. So you will achieve some results, but after a while, you fuck it up. And if we are going to take a look at this cycle, it's a repeating cycle, right? You have some results, you fuck it up, you have some losses, you self-doubt yourself, you're thinking by yourself, maybe this is not my strategy, maybe it's not something for me. I can better find a new strategy because that way I can achieve better results. And you are seeing all the creators online having results, so why can't you? That's the biggest question. And what it is doing actually, it is bringing you back to point A. If you keep repeating those same models. So you will never end up at point B. Like, what is point B? Point B is becoming profitable, having payouts, being consistent, trading with clarity, a model you trust. And you will never get from point A, watching the videos, seeing other people having success, to point B. Because you are continuously switching of strategies, what is causing the self-doubt, what is causing bad behavior, think about overtrading, revenge trading, things like that. And what we can see is that this is your chart. This is actually your chart. And you're not profitable at the moment. Because you are repeating the exact same thing I just outlined. So if I remove everything, because the only thing what we have to do is we have to define our point A and our point B. And we can see this in the charts as well. If we take a look at price, we can see the Nasdaq here on the hourly. We only have to define our point A and our point B. So let's say this is our point A and we want to go to point B. Now what we can see is we might have some SMT over here. We can see we have the SMT. So we expect price going lower. And what is this confirming to us? Price has been going lower already for a few days. So it can go lower again. Sounds logic, right? So we have SMT confirming it, going lower. We have seen some manipulation. Fair value gap got created. So in this hourly fair value gap, we can simply look for a short. We have defined our point A, where we want price to see, and we can define our point B, where do we want to go. So if I draw this also out, so if we have drawn this out, this is our liquidity, what we are targeting. And we can see liquidity here as well. So from here, we have defined our point A, of where we want price to see before we get in touch targeting point B. And it's as simple as that, because when you defined your A, when you defined your B, you know where you want price to go and you know where it is going to trade. Price have been going lower, so we're targeting lower prices. Price manipulates up, we target the distribution down. And it's the perfect example here, as you can see, because it manipulates. So how do we actually catch an entry here? That's the biggest question. Because between point A and point B is not your entry. Between point A and point B, that's actually you sitting here. Between point A and point B, sitting you. And what do I mean with that? You have to find your A, you know where your B is, where you want to go. And in between A and B is your entry point. Your entry point, your execution, your risk management, your stop loss, the partials you might be taking. But who is actually doing that? That's the biggest question, right? You can think about it. I can clearly tell you have think about it, and it's you. You are in between point A and point B, and you can have the best strategy in the world. I just mentioned the IFVG, the market maker models, the Goldbach, the supply and demand, whatever it takes. But between point A and point B is you. And that's not about strategy. That's not about mechanics. It's all about who is pressing the buttons and what is going on in your own head. So there are 3 ways that you are dying on this road, right? You might not get in at your point A. So this is your original idea of what you have been thinking of. So you've now seen it. You did not get in at point A. You see price going down. You saw it, you froze, you're thinking by yourself, I need to catch this move because I have defined my point B. So we luckily get a hourly fair value gap back again. That's your point of interest. You're going to a lower time frame because you missed your first move. So you're thinking, I might need to make it fractal for myself to still catch a move. It trades in your hourly fair value gap. From there you wait for SMT. You get a 6-minute SMT. You draw out your CSD. And from there you wait patiently. It trades down. It displaces. And from here you catch your entry. It is displacing. It trades back. It displaces. You catch your entry. So you're in. You move your stop at the high because you don't want to see it coming back. And you're targeting your lower time frame point B. Because you're on the lower time frame, it is unlikely that you will ever get your higher time frame point B. Only if you align yourself with the higher time frame order flow. So from there you get in position and you see it running. It's going well. And what is happening exactly here? You think you have the trade running, you've got a good entry, narrative is good, you aligned yourself with the higher time frame. So this trade will run, but think about it. You just missed the original setup. And what is happening in your mind is you're thinking by yourself, I'm now in it, but what if it does not go to point B? So you see it running and you get some resistance here. You get a new SMT, you get some manipulation. What is it actually doing? I might need to get out because this is not going well. So I close the position because I'm safe. I missed the setup. I had now a good setup. I made money. I'm going out of it. So you jump out long before B. Because if we take a look, we have some manipulation, but it slowly continues with the run, ending up at our point B. And what this is telling to you, because you had the bad trade or you missed the trade at the first place, you're a bit more careful about the second trade because it might go wrong. You might miss it again, you don't want to fuck it up, so you're going out. And you still made money, that's good. But if you're honest against yourself, have you really followed your plan? And is your execution not mainly based on the emotions you had being in this run? So now you're thinking by yourself, okay, My point B has been hit. I'm still only 1 minute. I see some engineered liquidity here and I can trade it as well. So we have SMT on the lows. So I wait for CSD and I just enter. I move my stop somewhere here and I'm just going to target the engineered liquidity. Or I move my stop at the end of the fair value gap. We have the CSD and we get stopped out. And what we are thinking by ourselves, okay, I got a good trade. Now I got stopped out. I need to win this back. Whatever is coming up in your mind, I need to win this back, or the entry is still coming. This is where the mind games are starting, right? We got a good trade and you now lost a bad trade. So you wait for more confirmation because this maybe is the real trade. It manipulates more. Okay, so now we can find our CSD and we can just trade it again. If this displaces, I will be going in. So it manipulates again and we can see the CSD over here. We have the manipulation, it's displacing. So I just press enter. Move my stop here, targeting an eye. And what happens? I hit TP. So what I'm now thinking by myself, I am right. This is good. So you create the confidence of yourself and you're not a bad trader, you're thinking. I got 2 wins, I got 1 loss. We can oversee that. From here you can create the confidence of I'm a good trader. We hit point B again, the higher time frame point B. So why do I not enter along here and just target the hourly fair value gap? And what that's exactly doing is you end up in chop, you lose again, you think by yourself, okay, this is all engineered liquidity, I'm going to enter again, move my TP to the hourly fair value gap, and you get stopped out again. Okay, maybe I need to wait for SMT. Maybe SMT is confirming it for me. So I wait for SMT. So I got a new 3-minute SMT over here. So I'm going to wait for the CSD. I got a 10-minute SMT. Okay, I go in again, targeting those highs. So I go in again and from there I lose. I blew my whole evaluation. I fucked up my personal capital. I revenge traded the whole day thinking I was the best trader I could ever imagine. And you're trading a model you are not honest against to, because you did not follow the higher time frame order flow. You were playing with yourself. You were playing those mind games, what if, or if this, then that, I want to see this. And that's driving you crazy, because if you think about it, you have a model, it can be so objective as you might think about, and you can still trade like this. Hitting a win, hitting a loss, go into revenge trading, few setups after each other. You can trade all the models in the world. And I'm not saying that they are not working right, but you have to define your point A and your B, and in between that point A and B is you. The man behind the computer, the man clicking the mouse, clicking the buttons. You are operating on the system. And if you can't operate the system, how are you expecting an objective outcome? Because you have an objective model, right? So if we are going to zoom out again, you can clearly define your whole week with only 2 to 3, 4 setups maximum. So let's say order flow is going down. I will draw it out for you with a path. Order flow is going down, so I'm only looking at shorts. Now, if we look at last week, we can see that we have defined our point A. I might need to get in the 5 minutes to make it more clear for you. So we have defined on the higher time frame that we are bearish. So we look and we define that we are bearish. So we are looking at highs and lows getting taken. So let's look at the AM session first. We can define our point A, where we are likely interested in going short. Point A gets hit at 11, and we can define our B also. So we have defined our point A and B, and in between here, that's you. In between here is you and your objective model. What your objective model might be is SMT, CSD, market maker models, fair value gaps, Goldbach, algo paths, whatever you can think about. You are trading this in between point A and point B. And the biggest thing you have to take care of is handling your own emotions and not getting trapped up in your own bias, in your own thoughts, because you can fractalize it, right? We can see, all right, my lower time frame point A or point B is here. So from here, if I go maybe long here, because we are going higher, I might can catch a lower time frame scalp. Boom, you get stopped out because your higher time frame narrative was short anyways. So why are you comparing the lower time frame with the higher time frame when it is not aligned? So from here, your point A, you actually went short. You hit your stop at the previous high, targeting B. Your stop might get a little bigger. And you easily hit the 1, 2, 3 R. Sounds fair, not much risk on the table. And you only need 2 of these a week. If I draw a box out, so if I have drawn the box out, let's say this is your trading week and you maybe skip Mondays, so you start on Tuesday. From there, you also trade Wednesday, you trade Thursday, and you also trade Friday. So let's say the whole week is going short. Let's say this is the higher time frame looking right now, and you are trading the higher time frame together with the lower time frame. So the only thing what you have to do is on Tuesday, you have to find a high what's getting taken. So let's be this the lower time frame moving and it's ending up here. So the only thing what you have to do, you have aligned yourself with the higher time frame. You now aligned yourself with your point A where you want to see price to go to. And from there, you look for the confirmation, your CSD, your SMT, your market maker models, and you just simply trade the 1 to 3 R. It might get hit here and you hit full TP. Once we end up at Wednesday, we can clearly define our point A and our point B. So we want to go short here and just simply hit the 1 to 3 R, or you also can have a bigger stop to trade the 1 to 3 R if you are focusing on the higher time frame. And let's say price is trading in the lower time frame and you get stopped out before it's going to your point B. You might get SMT up here and from there it continues going lower. Can happen, right? So for Tuesday you have +3, for Wednesday you have -1, for Thursday same story. You hit the 1 to 3 R, you have to find your high, your low, your A to B. You hit the 1 to 3 R and you get +3. So Friday is coming along, you might get a thank God it's Friday profile. Whatever you can think about, Friday, you can fuck it up. You have your 1 to 3 and you might get stopped out again. Price is going like this. It might get another SMT before going down. So you get stopped out here, -1. And if we are going to look at the math, you have +3, you have -1, +3, -1. You end up with the magic number of +4 R. Think about it. 4 setups a week. 2 wins, 2 losses, 4 trades, 4 R. You are net profitable. You can even have a lower barrier, right? This is a 50% won rate. Let's say you also lost on Tuesday. So -1 and you might hit partial on Friday. You have +1 R and you still end up with +2 R for the week. You can have a 30% win rate with a 1 to 3 R and you will still be profitable. That's the whole secret. And this is bigger than the chart. You are standing at point A right now and the trader you want to be is your point B. The market only ever does one thing. It reaches point A and it arrives at point B. Only question is whether you arrive with it. If you want to make that trip with me, subscribe, because every week I break down one part of the road. And I all want to thank you for watching. Don't forget to like, subscribe, and I will see you in the next one. Ciao.